Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is March 15th, 2024, the Ides of March, for those of you who are into Shakespeare. Um, I am going to run through some popular trading symbols and talk about some potential trading levels, both long and short, that might come up in the coming week, as well as review some trades that I'm currently in now with either individually or with our subscribers. Also, I'm going to make some. I'll be referencing supply and demand zones in this video, which is the basis and the foundation for all of our trades. Rather than going through the explanation of supply and demand here, you can find a link in the YouTube description for this video. You can find a link for a video that I had done describing how supply and demand zones work and how they're the basis for our trades. So you can find that in the description area for this video. So before I go into anything here, the usual disclaimer. Precision Trading Labs, we are not financial advisors nor money managers. Everything we do is for educational purposes only, and it's all to help our subscribers to become competent, confident traders. So there you go. So let's take a look at some of these symbols that we're going to look at. Here's Apple, and last week I had been going through the charts here, and I had identified this demand zone here where we expect or we're anticipating there would be a potential bounce. This is a daily chart of Apple. We can think of this as a pivot here, but this is also an area of consolidation where we were expecting to get a bounce out of that. Okay, so if we now flash forward here on March 7th, which is basically a little over a week or so ago, I got into a call, having bought a call. So I bought the June 21st expiration call, the 170 strike. So that was just a bit out of a couple of bucks out of the money. Obviously, I bought a good deal of time so that if ended up getting into the trade and it took a while to play out, win or lose, I wouldn't get too beaten up by time decay. So that's why I kind of bought this way out. And even though, of course, you pay more for the option doing that, you're going to get most of that back, of course, when you actually go to close the position. So I'm really not too concerned about that. So at any rate, I got in right here at the base of this, at the front door of this demand zone. We got a bit of a bounce here. And so, in fact, this thing is up about $3 for the stock. And so I got into the option here at 9:15. And in fact, if we take a quick look here now, there's the 9:15 entry price. We can see now here it's about 10.75 now. So I'm up about a $1.60 a premium based on that 9:15 entry. So that's what, about 16% or so. So that's where that is. That's where that's where the Apple trade is sitting now. Okay. If we take a look at Google, another of the FANG stocks. In fact, let me show you the before picture before we actually look at where this is now. So this is what I was looking at last week. Okay, so this was on March 8th. So this is when I did this video a week or so ago. And so this is where we were at the time. This is what I was looking at. And so I was talking about this supply zone right here, a rally base and a drop. And we were approximately about 6% away from that. So that was the basis for that. And so what we was anticipating was when price got up to here, we could express the trade by either shorting the stock or by buying a put. Okay, so now flash forward to this week. There is that supply zone that I just showed you, and so this is Thursday. This is yesterday, March 14th, and so price came up to here, and then basically closed out at the day yesterday, and then today we got a gap down, and so we actually had an aggregate move off of yesterday at about down about 220 or so. So, but anyway, I bought the call at 144.60. We're now sitting at 142.17. And so right here, here's our 860 entry price, and we can see on the last price, so we're up about a buck. This thing has gone from about 860 to about 975. So we're up about a buck here. So that's about a 10 or 11% move thereabouts. So that's where we're looking at. That's what I'm looking at on Google. Taking a look at Amazon. So no trade going on here. This was actually something we had last a week or so ago, but that's already gone. But anyway, so right here, here's where we are now at about 174.40, and right over here there is a 2-hour demand zone that's sitting right here. So in fact, if I change this from a daily to a 2-hour chart here, we will see right there we have a rally, a base, and a rally there. There's obviously that gap uh, on the 21st. In fact, that gap, I believe, is what we see this in a lot of charts. This is I believe, the nvda gap. The market had been in kind of a downswing right from here for about 3 days, and everyone was kind of getting a little skittish. And then nvda kind of knocked it out of the park on the night of the 20th. And so the next day on the 21st, you had or with the 21st into the 22nd. I can't remember which, but basically you see this gap in a lot of charts, and so I refer to that as the nvda gap here. So when price gets here, this is a potential level, but it is a very obvious level. So I'll be waiting to see kind of how it arrives here, and what the condition of the market is. And it is a potential setup here, but we'll see what happens. I'm always a little wary of very obvious levels. Having said that, when it gets there, it could in fact be a good level here, but I'm always want to be at least somewhat cautious because of the fact that it is an obvious level. The one thing I do want to kind of just check quickly here is to see where is this sitting in relation. In addition to the demand zone there, I want to see where we are in terms of other. So this is the lower your standard lower Bollinger Band, and you can see that thing is intersecting here. When price comes down here, obviously this is all going to roll over here. But the odds are the lower Bollinger Band will kind of more or less be a backstop to this demand zone. So we'll see where we are at that, but that's about 3% below where we are now. Okay, I don't really see any clean supply up here. This is all used up here, so that's the condition of Amazon. Take a look at Netflix here. On the daily zone, again, there's the nvda gap that I just talked about. We have a drop, a base, and a rally there. There is a daily demand zone here. All my comments from before about the nvda gap apply to this here now. One thing I will take a look at also, and I didn't mark it here, but now that I'm looking at this, right over here, and let me just mark that here. There is a level, and let me just make that in blue here, just so you can tell it apart here. There is a level right here, and I'll be kind of keeping an eye on that as well. So that's right here. And so that's about 2.5% down from where we are now. So there was a near miss on that. So I'm going to keep an eye on that. So that's a potential level here. And then also right here, here's your 52-week high on Netflix. So right above that 52-week high, and I think this is a daily level or 2 hours. I can't remember which. Let me see what I have here. So this is a 30-minute. This is a 2-hour. Yeah, I guess this is probably in the 2-hour chart. So that there is a rally, a base, and a drop there. So there's a supply zone there. So of course we can express a bearish trade out of here, either by buying a put or shorting the stock. Obviously, it's a very expensive share price, so I'm a huge fan, of course, of using options here. Again, for explanations about supply and demand zones, check out the link that's in the description area of this video. Okay, so that's Netflix. Taking a look at Facebook or Meta, still haven't quite gotten used to that yet. Again, there's the nvda gap on all the charts there. There is the drop base and a rally there. I'll be keeping an eye on this, but nothing here really, nothing on Facebook is really, Meta is really rocking my world here. Let me just take a really quick look at that. So this is an all-time high right here for Meta. Um, right here, this is a supply. This is kind of a sloppy, weak supply zone. And it doesn't really go very far, so I'm really not in love with this. So I'm really actually kind of meh about the whole thing here. So there's really not a whole lot about Meta here. Taking a quick look here at Microsoft. And also, this is a passing comment. Not every chart has a setup. So there's no shame in going, hey, here's a stock I like to trade, and there's just no setup. So that was certainly the case with Meta here. So right here, here's where we closed on Microsoft at around 416. There is a supply zone right here. There's a rally, a base, and a drop there. I do like that gap there. This is a fresh level, I believe. In fact, yeah, in fact, that's pretty much, I believe, an all-time high, as well as the 52-week high right there with those blue crosses. That's the all-time high. So, well, we'll keep an eye on that. And then right here, this is an area I'm looking at, but this is really not a fresh demand zone because of all of this trading that occurs right before that. So I'm really actually not really in love with that. So I'll be keeping an eye on this. Again, nothing really rocks my world on here. I would want to see this thing kind of drop more to feel that there was more juice in this trade here. This didn't really go very far from here. So I don't know how good the risk and reward on this is going to be. So that's the story with Microsoft. And lastly, I'm going to finish off with nvda here. And so, of course, nvda has been rather exciting for everybody over the last few months. This is what I was looking at last week. Okay, so this is what I was looking at on March 8th. And reason for these extra little colors here, I was looking at this in the post market as well. So that dark red and that light blue, that's the extended hour action here. So I was just looking to see what this thing was going to look like when it actually got here on Monday, this past Monday. So right here in the 2-hour chart, there was a drop, a base, and a rally there. This was an area of demand here, and so a lot of times we'll basically buy a call here. But because of the fact that this thing was kind of getting really slammed down from here after hitting an all-time high here, rather than buying a call, I decided to use to basically sell premium here. And so instead of buying a call, actually sold a bull put vertical spread in order to capture basically have a short duration trade, as well as to capitalize on time decay, and then not have to actually worry about whether we got a major bounce out of this. Okay, so flash forwarding to the present now. Here's what I ended up doing here on Monday, I believe, right? That was the 11th, right? So that would be Monday. So what I did on Monday was I sold a bull put vertical spread. And in fact, so this line here represents the put that was sold. This represents the put that was bought. So we can see the distance between the strikes was $10, and I believe that's exactly how nvda is denominated at this point in $10 increments. So this is essentially one strike apart. So I managed to for selling the March 22nd expiration, which at the time had about 12 calendar days to go, or 9 calendar days to go, whatever it was. 11 calendar days to go at the time that I did that. I sold the 830 by 820, okay, on the 11th, and I managed to collect $4.25 of credit. Okay, so for those of you who are new to spreads like this, if I collect $4.25 of credit, since the distance in the strikes was $10, that would mean that the max loss on this, if it didn't go well, would be $5.75. So definitely an inverted risk and reward, but a high probability trade, because of the fact that if you notice that the put at the time that I got in was about $22 below. The short strike was $22 below my entry point. So effectively, I had a $22 cushion when I got into this trade. So initially, this thing kind of went and started out really, really well. Over the period of about 2 days, we got this really nice bounce up to about 920. So I actually took off half the position that I had on here. Because at that point this thing had moved, and because of delta, because of the net delta on this, this thing actually went from 4.25 of credit up to, and it dropped to 2.25 of credit, which of course represented a $2 gain. Okay, so obviously, what I'm really hoping for is by the end, this thing is going to still be above 830, and so at that point, I'll be able to basically bank and collect the entire 4.25. But in order to be kind of sensible and cautious, what I did was I took half the position off, and it basically made $2 on that. So based on a 4.25 initial premium, obviously making that quick $2, that was 47% gain right off the bat. Okay, so ever since then, it has been kind of dribbling back a bit. So it's now sitting at around 878, still $48 above the short strike. So I'm still pretty good shape here. Obviously, this demand zone here still still with any luck still has some upward price pressure that's still waiting to be tapped, since it only went in here once. And I guess it actually kind of kissed this a second time, but it could very well still hold here. So we'll see where this see where this goes earlier in the coming week. Obviously, the time decay on this is going to be leaking out of this. Because now we're going to be into that last week where theta is just going to go nuts, which is obviously good for me here. So we'll wait to see what that does. Okay, so if we actually take a really quick look at this now, here's nvda. Here's my 4.25 entry price, and so right now on last, in fact, let me put this back. So here's where we are now. And so you can see now the option is the position is actually worth about $3. Okay. When I sold off that piece, it was only worth 2. Now it's worth 3. So it's picked up $1 here. So now it's only, if you sold out the rest of it, you would still make $1.25. Okay. But what I'm obviously looking to do here is hopefully, if this thing kind of stays relatively stable, I'm looking to obviously really try to capitalize on time decay in the coming week. Okay, so that's where we are now. If we project this thing out, okay, and let's just say and what I'm doing now is I'm going to shift this thing to expiration. Okay, so at expiration, anything above 830, of course, I get to keep the full amount of premium here. Okay, but even if this thing drops a couple of bucks below the 830, and let's say it goes to 828, at expiration, I'll basically be back to almost where I was, where I sold it after a couple of days, and I'll be making 2.25. So 830, 828, still good, still good there. So that's what this thing is going to look like at expiration here. Okay, but again, this is where we are right now. Okay, so right now at the last price, again, it's up about $1.25. So at any rate, that's where we are. So that's what I'll be looking at in the coming week. So right here, there's the level, there's the short option here. What I'll be, of course, looking for is hopefully that this will hold together. I'll do that, and then after that, if nvda breaks down, right down here, this is a daily demand zone right here. Okay, and if I shift that to right here and we just kind of expand that up, okay, we have a very clear rally-based rally here. So if we get a pullback into there, this will be a place for a good bullish trade here, where we could either buy a call or do a bull put credit spread. Excuse me, a bull call debit spread, and of course we could also do what I just did, do this again. but obviously I don't want this to happen until the week after next, of course. So at any rate, there you go. So thank you very much for the privilege of your time. Before I go here, I would be grateful if you would subscribe to our YouTube channel. Also, give us a like there. And lastly, if you would like to hear more about this whole supply and demand concept and how we use this to create high probability trades, both with options as well as just trading the underlying, please, there's a link in the description here. You can schedule a call with me, and I'd be happy to tell you about more about the whole supply and demand concept, as well as what we do at Precision Trading Labs. So at any rate, thanks again for your time. This is Mitch Firestone with Precision Trading Labs, and I will see you guys next time. Take care. Bye-bye.